shows with Big Boss Crypto, bringing you another day trading analysis on Bitcoin and on Chainlink. Yesterday we saw some madness in chart. I fortunately made 100% ROI on my long that I took down in this area. I'm gonna explain to you how I made that conclusion and what will happen next, because Bitcoin has been moving rapidly to the upside, and I'm warning you, don't be bullish right now because price might reverse in the next week. Let's look at the information we have. Okay, first of all, time for a little recap of what I said in my last market update. And that was that we were in our last and final leg down before completing the market maker structure. Take a look at the video to see what I mean with the market maker structure. We repeat it almost every other update, and we saw that we came down all the way down to 18.2k almost, where we shook out all the longs after the CPI numbers came in. I gave you the target at 18.6k as a minimum, but they moved further down than I expected. We still had some liquidity down at this side at 17.9k, and they didn't go that far, and I placed some longs at 18.6k. I had some orders at 18k, but when I saw what happened in this area, I'm gonna zoom in and explain to you why I went long at 18.4k and made a profit of 100% in this profit zone right here. So let's take a look at the 15-minute time frame so that I can elaborate what I did at 18.4k. First of all, let's remove this imbalance. We don't have it. We took it yesterday and took some more than I expected, but nevertheless I had my shorts filled in that zone and I took my profits. I didn't have any shorts in this area when the CPI numbers came in, because I don't trade news events. It's scary and it's volatile. You saw that yesterday. But nevertheless, I've told you that we were in our last leg down, and you know how the last legs finish. They always finish with VIX like this, and they are a high volume candle. So that's two requisites to look at when you want to change direction in your trading, and that's the VIX here, and it's usually a volume candle. I'm using the PVSRA indicator. Use it, it's great, because that tells you where the volume resides. And as you can see, I looked at the 5-minute time frame and I saw in this area that we had a huge wick. So I followed it very closely what the next candle would do, and that was a green candle, which means a lot of buy orders are stepping in, and an influx of buy orders stepped in here. So that was when I saw when the candle closed, I went long, because I do it in 3 steps almost when trading. I place a first order when I see a reversal might happening, and then when the W structure completes, I place another order, and then I possibly, if the move is slow, place another one. But that's my trading strategy. We don't have to go into that now. But as you can see, we completed a W structure right here and moved away from here quickly, because that's what the market maker does. He always moves quick when changing direction to trap all the retail traders, because he doesn't want to share his money with the retail traders. That's just the name of the game. Don't hate the players, hate the game, or something like that. No, I'm joking. But we can see we have a W structure. We moved away from it, and now we have to clarify where we went and why I took some profits here. That's because we had a volume candle which we drew out on Monday. So watch that video as well, because we had a volume candle residing in this area at 19.7k to 20k. And that's been taken, I would say. We have a little bit left. We went all the way up to 950, sorry. And we have, yeah, $50 left to take, but that's gonna be neglected because, yeah, it's probably going to go there. Okay, so let's draw out the structure. We see that we had a W. This is the first leg that up, and it followed by a sideways retrace. And we moved away from there as well with our second leg up. And we are currently, I would say, in our retrace because we haven't broken the 19.960 zone yet. When we break that, that's when we are in a third and final leg up. So the next thing that will happen, probably, if we don't continue lower, is that we will move in a third and final leg up, and that's where we will form a double top formation. And we have to prepare for changing direction soon. But we have our final leg up. I took some profits in this zone. I made 100% on my trading investment, and I've taken my profit, and I'm waiting for the top structure, and that is where I will go short. Okay, so the next thing you want to do is to look at the liquidation map, and as you can see, we have some liquidations here at the 20.2k, from 20k all the way up to 20.2k. We have a high liquidation zone for the shorts, where the market maker might move, or most likely, because we said that we are expecting a third and final leg up, and he will definitely go to this zone at least before he reverses price. And as you can see, a lot happened yesterday. We had huge influx of longs coming in, and it's shown in this liquidation map. Let's look at how much money it is. Yeah, it's, I would say $100 million is in the zone of from 19.5k all the way down to 19k or 18.5k. And you know, the market maker likes money because that's his business. He takes money from, yeah, the retail traders, or the dumb money as they call it themselves. And you know, when price will reverse, they will try to get this zone at least. But we don't have to look at that right now because we expect our third and final leg up before price reverses, and we could go all the way up to 20.2k because that's where we have a lot of liquidity. We could go all the way up to 22k, but that's like a next target. If we move from here up to 20.5k, then we could take a closer look at what's going on right here. But for now, 20.2k is a possible top out area. So let's break down Chainlink for you as well, our favorite coin on this channel and the best coin in the world. Yeah, I know Quant is moving up nicely. Yeah. We also invest in Quant as well. But Chainlink for the long term is a great project, and you've witnessed what kind of partnerships they have. And Eric Schmidt, the great guy who made Google what it is today. But we're day traders. We don't care about what Eric Schmidt or Swift or whatever anyone says. We just want to take some profits, and that's why we day trade. Okay, last time I told you when we were in this area that, yeah, we have an imbalance in the chart at 6.3k, but it was a long way down from the area we were at when I made the video last Wednesday. But they went there because Bitcoin moved down, and the CPI numbers made it move all the way down here. They took this imbalance, so we could delete it. And you know, you see these wicks, that's an indication that there is some exchanging and buy orders stepping in this area. That's why there is a wick, because they buy up all the sell orders. That's the name of the game. For someone to buy, someone has to sell, and for someone to sell, someone has to buy. That's why you see VIX, because someone buys when all of the retail or whoever is selling here. Someone is buying. That's the name of the game. Okay, so let's take a look at where we have some imbalances in the chart on the 1 hour time frame. We don't see this has been taken, this has been taken, yeah, like taken. We have a green candle here. And for all the scalpers, sorry, we have a final zone for the market maker to grab some liquidity in this area. He has recovered some of this candle, but not all of it, and we have a possible zone for the market maker to take in this area. But we expect a final leg up for Bitcoin, and that is possible scenario that Chainlink might move and recover this imbalance in the chart in this area where a lot of liquidity resides, and we marked it off on Monday, and it looks like it's moving here. If it takes this zone, we have an imbalance at 7.8, and if we move even stronger, Bitcoin continues to go up, Chainlink will go up because alts move aggressively. We could go all the way up to 8.2, but as a day trader, you just want to look at the next target, and that is at 7.4. Okay, so in conclusion, for this Friday and for this day trading week, I'm not going to trade the weekend because I made some nice profits, and I'm taking a bit of a chill pill this weekend. If nothing crazy happens, then I might trade. But nevertheless, I think it's going to be a chill weekend because we had some crazy moves, and that was mainly from all the investment banks that made these moves, and they moved the markets all over the place. So I think the market's going to be chill this weekend, but we never know. Okay, so the first one is that it's a matter of time for the shorts to get liquidated, and I'm talking about the 20.2 zone, which we looked at earlier on Monday and on Wednesday, that we have a huge influx of short liquidations at 19.8k all the way up to 20.2k. The 20.2k has not been taken yet, but it's a matter of time in my opinion. And retail is going long now as well. You saw that we have an influx of longs at 19.4k, and you know, when price reverses, they are gonna get liquidated most likely. And two, we have an influx of longs, as I said. They came in yesterday, they weren't there before, and it's a money grab at 19.2k for the market maker, so be careful. But as I said, we also have a final leg up before price reverses. So let's take a closer look at that. You want to look at the wicks at the tops. And third and final point is that we have the Shemitah crash window from 8th of October to November 8th. We did a video on it yesterday, or my brother did it, and you know, there are a lot of things going on right now. Everyone's preparing for what the Fed's going to do about inflation. We have the war. A lot of black swan events might happen the coming weeks, and it's written in the stars. So keep an eye on for that. And you know, none of this is financial advice. It's all for educational purposes only. Make your own decisions and try to learn from our videos and get a different opinion than your own, because you have to have an open mind to trade Bitcoin and crypto in general. And that's my final words. Have a nice weekend. Bye.